we're seeing much improved risk appetite at the start of the week in the financial markets. Monday and Tuesday, we saw equity markets bouncing back quite strongly, recording 2.5% gains on each day. That momentum has slowed a little bit on Wednesday, but we're still seeing underlying strength in these markets on the back of some positive news in relation to early data signs on the Omicron variant in relation to the severity of symptoms, which leads to lower hospitalizations, but then also in terms of the effectiveness of the vaccines. Obviously, the suggestions are that it's less effective and that boosters will be needed, but not as ineffective as was feared previously, which is why we're seeing this sentiment rebound across the equity space. Now, one area where it's particularly prevalent, the rebound that we've seen in the equity markets, is the FTSE 100, or on the OANDA charts, the UK 100 index. You can see that it's actually recovered much of the gains. As you can see on the daily chart here, it's actually recovered all of the gains it's lost since the outbreak of the Omicron variant and the announcement a little under 2 weeks ago. That's really interesting because many indices haven't recovered all of those losses. Some of them, around 50% of the losses, have so far been recovered. So the fact that the FTSE is recovered so much is a really strong signal. And I think there's a few reasons for this. One of which is the fact that we are seeing a recovery in things like commodity markets. So there's the commodity stocks in the UK 100 index, for example, have recovered well. But I think really the main factor in the FTSE outperformance compared to the other indices has been the movements that we've seen in the currency. Now, the pound has weakened somewhat over the course of the last week or so. We are seeing pared back expectations as far as the Bank of England is concerned. We're seeing the expectation at only a 25% chance, or a 25 to 50% chance at this point, of a rate hike at the meeting next week. Now, that was much higher over the last couple of leading into the release or the announcement around the Omicron variant. But now the level of uncertainty compared with on top of the mixed economic picture here in the UK means that those expectations have been pared back, regardless of the warning signs that we've had from the Bank of England officials, which have been delivered before and not followed up on. So maybe take a sign that the markets are taking those with a pinch of salt. Expectations pared back for December, ramped up considerably for that first rate hike now in February instead, which would be the following meeting month. We have much more information on the new Omicron variant. So we've seen a softening of the pound, which has lifted the index that much further. Of course, there is quite a significant inverse correlation between the two. I think it's around 85% of revenues generated by FTSE 100 companies comes from outside the UK. So a softer pound is typically beneficial for the index and vice versa. So that seems to be driving the bulk of the overperformance, aside from the things which I mentioned earlier in the video. And what that means is, if we look at the daily chart here, you can see that, like say, the index has recovered the bulk of those, all of those Omicron losses, and actually trades back near the levels we were seeing at the peak of last month. Now, what's interesting on the chart here is we've broken back above 7,200. That's having held on to 7,000, which was around the lows, where that major psychological barrier combines with prior support levels, but also the 200, 233-day simple moving average band. We're now back around the 7,400 level, where we were running into resistance previously. If we can manage a break above here, then 7,500 is the next key level above, but already we are starting to see some resistance. I think the most important thing here is that sentiment's going to remain fragile. Yes, we've had some good positive headlines on the Omicron variant, but as I say, the data sample is still very small. There's still a lot more we need to learn on the new variant. Negative headlines could flow equally as much as we have seen the positive headlines so far. So volatility is still very much going to remain in the markets. What we're seeing so far is strongly a relief rally across the broader markets. As I say, FTSE outperforming because of a softer pound as well, but that can turn south as well, because ultimately volatility is the thing we're going to continue to see over the coming weeks as we learn more and get a better grasp of what the outlook is going to be and what that ultimately means for the global economy and what central banks are going to have to do in order to contend with high inflation, but also potentially the spread of a new variant, which causes further restrictions, as we are already seeing.